Let me now bring on board Manoj Kaur, Executive Chairman of the JP Group. JP Associates yesterday came out with numbers. Numbers were not all that impressive. The stock has not corrected. And the reason why stock has not corrected is because the stock already is down more than 25% from the recent high. Okay, now JP Associates is really coming under pressure. Numbers were not all that strong. Debt burden is an issue. Cement business is going through a cyclical slowdown, and the real estate demand is yet to revive. So what's the way forward for the company? Let's discuss that with Mr. Gaur. Mr. Gaur, take us through how the quarter has panned out for JP Associates, and can performance be improved from here, especially when it comes to the margin picture?
As far as JP is concerned, Jaiprakash Associates is concerned, the revenue for the quarter went up by about 13%. It was 3,500 crore. And as we all know that the revenue consists of engineering construction business, which was at a same level of about 1388 crores as it was for the same quarter last year. Cement grew by about 7%, and the real estate increased by almost 100%. That is 612 crores against 308 crores for the last quarter, the corresponding year. And hospitality business over 15% up. So we see that this growth in fact has come partially from cement and partially from the real estate. As far as net worth of the company is concerned, it went up from 11,980 crores to 12,600 crores. However, the EBITDA came under pressure. In fact, it was about 880 crores against 1,000 crores, decrease of about 11%. And PAT has been under pressure in this quarter. That is because it was about 111 crores vis-a-vis 310 crores of the corresponding quarter last year.
Mr. Kaur, the cement business performance, there are expectations that there is going to be price hardening. Do you see demand improving, and is purchasing power now returning to cement manufacturers?
I can tell you that now we are noticing that growth perhaps is returning in the cement space. In December it was about 8% for the country, and as I mentioned to you, this is the action quarter, January to June. I hope that the impact which all the people have faced on cement costing because of fuel, that is coal, the diesel and logistics, we will be able to partially offset. But I expect a better quarters, these two quarters, for the industry and for the company also, because it is very clear that while newspapers are full of reports how Prime Minister office is looking into the FSA issues for the power, but there is no mention about the problem cement industry, which is also very vital. It is an industry which supports infrastructure. It is an industry which supports the consumer, real estate and the homeowners, and it is an industry which is fourth largest employment generator in the country. It is passing through a lot of crisis with coal. In fact, practically 40% of the Indian cement capacity is now being fed by imported coal. So that is the situation today. So yes, I expect that industry cement is going to do better.
Mr. Gaur, how did the construction business do in the December quarter, and can we expect a pickup in this segment?
Well, as I already mentioned, the construction quarter, as I mentioned that this quarter under review, we completed big projects, Karcham Wang 2 and Yamuna Expressway, and we are mobilizing and we are now accelerating our progress in Bhutan. So this quarter, the engineering construction segment was able to just maintain what it was in the last quarter. That is the corresponding quarter of the previous year. And I hope that this will do better in this segment will do better in the January to March quarter.
What about real estate? Is it looking up, and does lower interest rates help pick up in demand any which way?
Company being in public domain for more than 27 years, that it is an infrastructure company with intention cement. Real estate constitutes only 10% of its revenue base. I would like to share our experience that with the Government of India's initiative to accelerate housing loan to reach the last mile, we can definitely see that there are good demand getting generated and affordable housing segment. And I can say that in fact for this quarter ending December, the real estate segment for JPA recorded about 612 crores of revenue, and on a year basis it will not turn out to be 300 crores, but it would be at least 30% more than what it was on a year basis for the year ending 11-12.
Mr. Gaur, your stock has been under pressure in the last 3 months. You've lost, or the stock has lost nearly 21%. This is mainly due to concerns on your high debt and reports that you are currently facing a financing crunch. Should there be any reason for investors to be concerned?
I can only, through your channel, like to say that with the blessing of God, entire organization is prudently working. Yes, debt level is high, and yes, we have taken decisive steps to address how this debt has to be recast. Let me also share with you that JP Infratech, where there was a debt of 6,800 crores, which was for a 10-year tenor with a 2-year moratorium, after the COD, it has been refinanced with 2/3 of debt having a tenor of 17 years. That type of faith people have on the performance of this company, on the fundamental of this company. We raised a QIP in JPA. That time the share price was about 83 plus. I know, I also observe the share price which has taken a beating, but it is very unfortunate that people start a rumor and try to beat the share price. I do not know what they want to gain by this. As far as company is concerned, company would deliver, will keep on delivering, not only for our bankers and for our employees, but for our investors and for our country.